Welcome back to Behind the Trade. Before we get started, don't forget to like and subscribe. It helps this channel out tremendously when you do so. So, over the weekend, I held a spaces with a friend of mine and student of mine who's a relatively newer trader in this space and is doing a phenomenal job. He's having an absolutely phenomenal March in terms of his profit. So, I thought it'd be a great idea to have him on a spaces, interview him, see what his thoughts are on what it was like to learn to trade options profitably and any advice he'd have for other people. Now, while we were on the spaces, we also had another expert trader join who provided some incredible insights on how he's trading in light of the Iran war, what he's thinking about volatility, and other topics. It was such a tremendous spaces that I thought it would be great to share the spaces with everybody here on YouTube. So there's no video to this YouTube. Uh, there's no video to this. There's only audio, but it was tremendously valuable. So take a listen. Let me know what you think in the comments. Thanks. It's 8:04 East Coast. I'll get started here. The idea behind this spaces, everybody, was one, because I haven't held a spaces in a while. I wanted to hop on here and talk about the market, what's going on with Iran, how I think that's affecting options trades. We had a rough January, February. March has been a little bit different. So I want to talk about that and talk about why options traders might be seeing profit here in March where they maybe didn't see it in February. So I want to talk about that, but I also wanted to interview Keith. So Keith is a friend of mine. I'll let him tell his kind of backstory. He's a newer trader that is just crushing it right now. And I think it would be great for everybody to hear his perspective on, how he got into trading options, when he first learned about that he could sell options, how he's been successful so far. So with that, I'll hop into kind of the macro stuff, and then we'll get into the conversation with Keith. So what we're seeing here, we're in week 4 of this Iran conflict, and that's caused a massive spike in volatility. Recently, just a few days ago, I guess it was yesterday night, Trump gave Iran an ultimatum. If they didn't open up the Straits of Hormuz, they were going to bomb their power plants, starting with the largest and going on until they open up the Straits of Hormuz. In response, and that threat expires Monday evening. So that's going to lead to probably a lot of volatility. And we'll talk about how we can take advantage of that as options traders. So in response, we had Iran immediately close the Straits of Hormuz and say, we will start attacking your bases in foreign countries if you go through with this threat. So as a response, on Friday, we closed Friday with a 27 VIX. And that is still really high, guys. So we had the VIX tap out at 29.5 on March 6th. And since then, between March 6th and March about 17th, we had the VIX just start to trend downwards. I wouldn't say it's collapsing, but it started to trend downwards from a 29 to a 22.3. And that was when the Iran war kind of seemed to be settling out. We were getting a lot of news that Iran didn't have any missiles left. We were blowing up all their warships. It seems like they were just in a position where all they could do is surrender. And that may still be the position that they're in, minus the jockeying that's going on between Trump and Iran's leadership. But what that allowed for us as options traders is, we take advantage of volatility. One of the 2 or 3 components that allow options sellers to make money is collapsing volatility, because like I talk about all the time, that causes premium expands when volatility is high, and then it collapses when it contracts. So between March 6th and March 17th, we saw pretty much a steady contraction of volatility. And if you're an options seller listening to this, you should have been profitable during that time. Now, if you weren't profitable during that time, it could be as a result of, if you had placed trades earlier in March or in February that you were closing out based on your exit rules during that time. But if you were just starting to put on trades, if you were waiting for volatility to rise up to that 29 level, and if you had done that, you would have been, one, psychic and no one was going there. None of us did. But two, it would have been a very smart time for you to put on short options positions. And you should have been profitable during that time from the 6th to the 17th of March. Now, if you were not in the camp of you put on too many trades earlier before volatility was done rising, and you still weren't profitable, like you weren't in that category, but you weren't profitable from March 6th to 17th, I think that's a sign for you that you should take a look at your strategies, how you enter into the trades, how you manage them, and how you exit them, because you really should have probably been profitable in that time. And so yeah, take a look at your strategies. Reach out, if you were one of those people, reach out to Bobby or myself or somebody to get some tips on why you may not have been profitable at that time. Leading up to March here, January and February, we had rising volatility those 2 months. And so most, I would say, option sellers, if you are doing medium term duration option selling, so for example, from 40, entering your trades around 45 days, exiting at 21 days. That's what I mean by kind of medium term, not you're selling leaps like Bobby, or you're selling very short term options, which I don't recommend you doing. Just if you're selling them just a few days out. Um, if you're in that camp, then yeah, you should then during February and March, those are probably kind of rough months for you. And I don't want you to think that you are not a successful or profitable trader if you struggled in February or if you struggled in January. The goal of the game here is to manage while volatility is rising. And that's what it's been doing all year. It's been rising because we can make so much profit when it is collapsing. So if we fast forward from then to today, we're at a 27. It's a phenomenal opportunity for us to make money as option sellers. If you are on the sidelines, if you are waiting for volatility to keep rising, I wouldn't suggest you do that. I think with the Iran dispute, I do think they are very outgunned from the United States. I don't see a lot of other countries coming to their aid. And I would think that and we're in week 4 of this war, but I would think that it's going to resolve soon. And when it does, we're going to have a long tail of volatility capitulating, a long tail of volatility collapsing, and that is going to be very profitable for option sellers. So in these months where it's kind of rising, we are managing, we're trying to make a little bit of money. We're making sure we don't lose any money. We're being um, very risk adverse. We're managing our positions early. But when this volatility starts to collapse, and it will, because volatility is mean reverting and it can only stay up at this level of 27 for so long. We've been up here for a few weeks now. It's going to start collapsing, and we're going to start making really good money as option sellers. This month, I've made 32,000, I think, this month because of this volatility collapse from 29 down to 22 in March 7th through 17th. Now it started to rise again, but I think we're going to see another collapse. Um, and then I'm going to throw out a plug here. I did just, yeah, and I haven't been on here a lot lately. I did just release my options portfolio masterclass. That first course will be on April 18th. If some of the things that I'm saying are not making sense to you, and the terminology of options can be difficult to learn until you've heard it several times. If you don't understand what I'm talking about with volatility and how you can take advantage of it in this rising volatility that we have right now, or this high volatility, I encourage you to explore the masterclass. The link is in my profile. So I do see, and that's it for my narration here. Now I'm gonna open it up. Let's see. Somebody, JRD, requested to speak. I just added you. Feel free if there's something you want to say, JRD. But with that, Keith, do you have anything you want to say as kind of an introduction about yourself?
Yeah, sure. I'll just kind of introduce how I started. I kind of started from a friend. I own a couple of Tesla shares. A
Keith, we're
friend
still
of
having
mine.
some issues with your audio. It's still kind of going in and out.
How about now?
JRD, as he's resolving that issue, was there something you wanted to say?
Yeah, Greg, I appreciate the insight. I've been an option seller for a long time, generating on average 20 to 60 grand a month. I caution your listeners, there is the tail risk event, and we are staring at it. The rhetoric is not slowing down, it's increasing. There's brinksmanship left and right. So while VIX is at 28, 27, it could easily spike to 40 this week. So in general, in a normal environment, it makes sense, but I don't think this time qualifies personally.
Oh, that's interesting. Why do you think there's going to be a continued escalation in the war that could rise the volatility, the VIX, he's referring to the VIX, up to a 40?
I'm not calling 40. I just the trend is not positive from things calming down. I mean, look at the tweets. Our president 1 minute is saying things are going to calm down. We're looking for resolution, an off ramp. Meanwhile, Iran is saying we won't even fucking talk to you guys. Excuse for the language. We won't even talk to the United States. If you bomb one of, I think I read a day like at most one energy facility in Iran accounts for 3% of their energy. If you attack one of those, we will go after numerous targets across the Middle East, not just military support, but also civilian infrastructure. Like it's brinksmanship. If there is an escalation, so I always think back. I had similar senses of when like the COVID wave was coming, and it's just like we're at a tail risk scenario, and we should be mindful of that escalatory factor.
Yeah,
It's
that's
not it's categorically just not a normal environment. Like it's brinksmanship.
it's what?
Brinksmanship, like we're at the brink of a major escalation across the board, and we shouldn't discount that as a mean reversion.
Yeah, no, I agree with you. I agree with you completely. I don't know, it's hard to see a lot of it. Like, what do you see in terms of the escalation? Like, it doesn't seem like Iran has a lot of ammunition. Their
Oh,
warships seem to go on.
no. So you need to listen. Like, so that's one of the things where like Twitter and Spaces has been an advantage. Like, so like if you think back to early COVID, if you watch the news, it was not going to be a big deal. 2 weeks to slow the spread. But if you like tune into some of the spaces from the Iranian point of view, they've got the cards. They're not being slowed down at all. They are bombing Tel Aviv at will. Like they really have exhausted a lot of the defense capabilities. It's not as like from my opinion, after just digging under to some of the, I don't know, some in a lot of ways propaganda, not nearly as settled as like we're winning the war as it's being made out to be.
Right,
It,
right.
it,
That's always the
yeah,
the line, isn't it? That like
yeah.
we're winning. Okay, well, so why is it taking so long, right?
They're
Um,
bombing Tel Aviv at will using cluster munitions. Like you saw, I don't know if it was I don't know if it's like Doha near the nuclear facility in Israel. That's a potential major escalation. And meanwhile, like Trump's sending 2,500 Marines like yesterday that take a week in transit. There's talk of, taking the Card Island. Like that is such a monumental escalation. It's
Yeah.
not, we want. I mean, we've been conditioned to buy the dip and Taco, and it's just we're one tweet away from a major rip. Like I just, it, that's like empirically, that's the more likely scenario. But we need to account for tail risk of this just fucking going tits up.
Yeah, no, that's really wise caution. Let me ask you, what are you doing with your portfolio, or your options portfolio specifically right now to hedge against that tail risk?
So great question. So I have been a major covered call seller on a massive Tesla position that I've had for a number of years now, and that's been, comfortable. They introduced 3 days a week options. I've been taking advantage of that. But honestly, Friday, I went all cash. I'm like, I feel better about just waiting 2 weeks and letting this play out because either it's going to get a lot worse or a lot better. And if it gets a lot better, great, I'll re-enter. But the tail risk at this stage just isn't worth it to me. It's just not. I'll sell. So I went all cash, and I'll sell cash secured puts at maybe 10% under my sell price, or even maybe tighter than that, given just Tesla option levels. I want to play it close. If it does have a quick reversal, I don't want to miss out on it all. But I think the tail risk at this point is significant, personally.
Yeah, no, that's really interesting. It sounds like you do the same yeah, kind of the same strategy I do, which is with my Tesla shares, which most of my capital is in Tesla shares. I'm more concerned about maintaining that portfolio value, and so I sell covered call. I've my shares completely covered right now. Than I am, concerned about missing some rip up, to the upside. I'd much rather
Yeah.
protect my shares with covered calls, even if that means that I have to roll them out in expiration as Tesla's, appreciates due to robo taxi or merger with SpaceX or whatever happens to be the situation.
No, and I appreciate it 100%. Like as a Tesla shareholder, we've seen so much volatility. I mean, the Twitter days were so painful watching it go from 300 to 100, and then hopefully you double down and participate on that upside. But I'm not risking going back to sub 300 with something that's not really Tesla's fault.
Yeah, yeah. No,
Yeah.
thank you for
Those are my thoughts. Yeah, man.
yeah,
Good,
thank you
good,
for your
good conversation.
yeah, thank you for your perspective. I'd love to just sit down with you for an hour on a spaces and we could talk about this all day. You sound like a really interesting guy, but I do want to get back to
Sure, man. Appreciate it.
Keith. I appreciate you. I just followed you and love to talk to you again soon. We also have the exact same Cybertruck with the same wrap. So, we're basically
That's the move. The matte black is the move. Good call, Greg. Thank you,
yes, it
buddy.
is. All right. Keith. So anyway, Keith, did you get your microphone figured out? Let's see. Let's see. Keith, can you hear me? Requested, approved. There we go. Yeah, now we hear you loud and clear.
Okay, I switched to a headphone instead. But yeah, so my story was, I have some Tesla shares as well, and a friend of mine asked, why don't you sell some covered calls on it? I didn't even know what that was, so I started researching. About a week later, I sold my first covered call on it, and that was like in November, December. Um, and then I got a hold of your class. I took it January 31st. And from then, some late February, like 19th, 20th, or something like that, I moved my funds from Schwab to Tasty Trade. And I started, really doing your strategy at that time. And overall, it's been great. I've been doing pretty well. Like February was like a positive month. Maybe couple $1,000, $2, $3,000. But March was really good for me. I'm up like around 23,000.
That's amazing. And so this friend that said you should sell some covered calls, is he an option seller, or was he like, where did this conversation come from?
We were just driving, and then no, he's not an option seller. He doesn't do any stocks whatsoever. He just, he probably heard it from a friend of his, and he just brought it up to me. Funny thing is, he knew about the class as well. He didn't take it, and he put some money in, and he's not doing very well.
Oh, it's that friend. You told me a
Yeah,
little bit about that. That's
yeah,
unfortunate. The options they're so misunderstood. Every time I tell somebody about options, they're like, "Oh yeah, I've played options before." And I'm like, in my brain, I'm like, "We're not playing options." Everybody wants to associate the word playing with options. Once you discover option selling and you understand how the probabilities can be in your favor and how volatility is in your favor and how all these things stack up in your favor, we're not playing options. We are using statistics and back tested methods that have proved to be profitable time after time after time. There's no playing. It's all rules based, it's all statistics based. Now, if you're on the other side, if you are buying an out of the money call option, or any call option really, unless it's deep in the money, I guess, your probability to profit are less than 50%, 50% if you're lucky, if you are at the money. Um, that maybe is, playing with options, but yeah. So was that the first time, Keith, that you had heard about selling options?
yeah. That was the first time. I've never heard about it beforehand. Before that, it was only buying options. I tried that when I was really young, around like 18, 20, and did really well, lost all my money, decided I was never going to touch, options or stocks again, besides long-term investing. And so, yeah, that was the first time I heard of selling options.
I think that's one of the most interesting aspects of being an options seller. I'm 37 now, and I didn't hear about, I think I bought my first option probably when I was 21 or something and lost money on it. I think it was uh, maybe like DDD, which was like a 3D printing company or something. But I had no idea that you could sell options. I thought that was just for market makers. I thought that was, I don't know if I even thought about who was selling the options. And I never heard anybody talking about selling options. So it's really interesting. What do you think was the hardest concept for you to learn in selling options?
It was kind of hard to grasp at first, but if you keep plugging away at it, everything starts clicking. Some of the later concepts I think was like the strangles, how we can make money in either direction. That kind of clicked recently, and that really opened my eyes to how we can profit from selling options.
Yeah, because as long as it stays between those two strikes that maybe you set out to, you have a 85% probability of profit on each side, maybe you're at a 16 delta. Yeah, you can make money on both sides. We're expecting the stock to stay in between those two strikes. And then the cool thing about that, right, is you're actually using less buying power if you put on both sides, and you have a higher max profit potential as well. So yeah, right now, I mean, that's kind of a good point here. And I'd be interested, what you're doing, Keith or JRD. Um, right now, maybe the end of last year, I was just doing put strategies, right? I would just sell puts. I wouldn't have the call side on because the market was just, was ripping. Tech stocks were ripping. But when we're in times like this, I always have strangles on because I don't know which direction the market's going to go in, right? We could go, we could keep trending down, in which case I want those calls as protection. If we start going back up, I want the puts as protection on the call sides, right? So I see JRD requested to go off off mute here. What are you doing, Jared? Are you doing mostly strangles or are you doing something else? Well, I guess
No,
you're
I'll just like just give some context for like the options market. 10 years ago, retail accounted for 10% of option volume.
Mhm.
5 years ago, it accounted for 25%. Today, it's close to 50%. You
That's right.
need to try to figure out a way to play the house. The house always wins. 80% of options expire worthless. So figure out a way to play the house. The house usually wins. Like the gamification, the Robin Hood, the degen gamblers, you want to sell to those folks. So Greg is spot on. Like it's honestly free money if you're thinking about it from a probability standpoint. You sell that, I mentioned tail risk earlier, but from a Tesla perspective, you're selling the probability of a 3% move by Wednesday is very low, but there's a high demand for it.
That's
So
right.
you want to, if you can figure out a way to play the house always wins. And with the volumes today, there's a lot of free money to be made, in my opinion.
Yeah, that's a great point, and I appreciate you bringing up the explosion in options in retail participation in options in the last number of years. Really, COVID was kind of the catalyst for it. I think there were so many people sitting at home, they started working from home, not really working, right? Maybe working half the day, and options trading. I think options volume has doubled since 2022. I saw a stat on that recently, and retail participation, like you said, is absolutely exploding. One kind of comment on that is a I'm going to say maybe a large majority of that, but a lot of that are 0-day options, which makes me pretty nervous because 0-day options, I trade 0-day options. I know Keith does as well. But I only do that. I only do 0 days when volatility is kind of on the lower end, when we're about at a 15, because when we're up here at 27, you might go from up 50% to down 600% in 5 minutes. And I don't want to be in that position because I have very
Absolutely.
strict risk management rules. So even though I can't get as wide when volatility is at like a 15, I'm not is not going to have the price swings that are going to cause me heartburn as often.
Are you a seller or a buyer at zero DTEs?
Oh, a seller. I'm
Oh,
always a
yeah,
seller.
yeah.
I occasionally buy, very occasionally, um, if the VIX is low and or not the VIX is low, but the IVR is low for that underlying, and it appears to be oversold using momentum indicators. Occasionally, I'll buy, but not often.
Yeah, and it's like a honed skill of like kind of figuring out where the walls are, and you see so much algorithmic trading today. It's ridiculous. Like you'll see it, especially with Tesla, run up and then pull back, like mean revert, like right below the call wall, and just dance with it. It takes a while, I think, to kind of learn that intuition and get a feel for it. But if you can find that balance of like when there's the sprint, first you see it like the pre-market and at the market open, and then by 10 it mean reverts. If you can kind of find that at 9:45 to 10:15 spike and sell the call wall right above it, that's usually like 9 out of 10 times, in my opinion, a good trade.
Yeah, I don't know if you know Bobby, who's also on
Yeah, no,
here.
the reason I'm on this space is because of Bobby. I just followed him. We got a good dialogue recently. I'm a
Oh,
sailor
okay.
also. So I
I,
saw him in and I'm like, let me see what he's listening to. So
I was gonna say you sound a lot like Bobby with with
kindred
Tesla.
spirit. Yeah, man.
He's every day I log into X and I see him. Oh, I did exactly what it does every time.
Yeah.
Hit that. He doesn't call it the call wall, but he's like it hits that. It's
It does,
something gas
man. It's
now.
crazy. And like there's such a large retail holding. And like I don't think we understand like it's been very well documented in crypto and how like the market manipulation, but like these brokerages are doing that.
Oh
They're
yeah,
selling, shares that they don't like haven't located, and there's so much money to be made on these expired worthless options. Like you saw how they just released Monday, Wednesday, Friday on
Yeah.
Tesla, Nvidia, and like that is so much money for the brokerages every single day.
Oh yeah, those commissions and those fees. That's I'm sure that's why they did it. While I'm chatting with you here, how are you taking advantage of the Monday, Wednesday, Friday expirations? Because I'm doing the same thing. Um, I recently I was like, oh, why don't I just do? I had I was really cash. I was really cash heavy going into the beginning of this year because volatility was so low. And so when they introduced the Monday, Wednesday, Friday, I decided to just um, sell 3 puts on Tesla and just do a little wheel, which I'm not usually a fan of the wheel, but I was like, oh, I'll just play with the wheel with 3 puts, right? It's like 50 grand or something like that, and it was working for a while until recently. Now it's pulled back under 400, which it was flirting between 400 and 430 for like a month and a half there, but it pulled back, and so now I'm just kind of stuck with the shares and some covered calls there. But how are you using the Monday, Wednesday expiration to your advantage?
Well, great question. So prior Monday, Wednesday, Friday, I would usually just sell the Friday that were probably $20 to $25 out of the money, like ahead of the strike price. On a Ideally on a Monday because you usually get that push, or maybe on the Friday if I thought like the next week looked a little weak or concerning, and I would just like either roll it down or hold it for that entire week. And 1 out of 10, I'm buying it back.
Yeah.
And that was a pretty good formula.
What were you doing that based on a delta, or were you doing that based on $25 out?
$25 out. I just felt the call walls. Like if it was at 420, it was very unlikely to go above 450, 445, or I'd probably try to pick a call wall that I thought was reasonable. Maybe even if it's trading at 420, I would feel comfortable on that Friday previously selling 440 for a good $1 to $1.50 maybe premium, which is good money.
Yeah.
That's really good money for a low probability event. If it did, and ideally, I'd sell that on a Monday. So, like, if it closed at Friday at 420, it may run to 427 on the Monday, and I'm selling 445
Right.
on that Monday. That's the best case scenario.
Yeah.
Um, when they introduced Monday, Wednesday, Friday, I got my face punched in trying to figure out like how the new math was working and how like I really fucked up. It took probably like 2 good weeks, maybe even three, to kind of figure out a good clip. Best cadence so far is being cash even on at least Monday. It really depends. You got to kind of read the tea leaves on how the market's trending. But
What do you mean by
on
cash even?
not having any position on a day that opens Monday, Wednesday, or Friday. So having almost selling zero DTEs, honestly. And so, like, say that Monday, I try to target $1 premiums and above. So if it's trading, 400 to 405, I'm selling 412 and a half on a sprint run up starting at 402 because I don't think it's going to go that high without a sell off.
Hmm.
Right,
Yeah.
right, for a 0 DTE.
So just to make sure I understand, on Mondays, Wednesdays, and Fridays, which are when the daily, I don't know if we're calling these daily expirations or what, but anyway, intra week we have expirations on Monday, Wednesdays, and Fridays. You were selling you were selling calls on Monday morning, expiring Monday afternoon,
Yes,
Wednesday morning
yes,
expiring
exactly.
Wednesday
Where
afternoon.
I thought, like, the momentum, like, slightly above where it would stop, because it's just like a classic pattern with Tesla. Like, you see it every freaking day, and it's frustrating, but, like, you get used to it. Like, you get these sugar highs between 9:30 and 10:15, or maybe 11 if you're lucky, and then it just slowly fades, and then it mean reverts, and it just feels very algorithmic.
Hmm.
Um, so those are Monday, Wednesday, and Fridays. But I'd say like on a Tuesday ramp, I'll sell a slightly higher because you don't want to miss the opportunity because if it opens lower on Wednesday. So say it's trading, 402 to 409 on Monday. I might sell a 415 and roll down to a 412.5 on Monday and get that premium. And then on Tuesday, say on Monday it closes at 406. On Tuesday, if we get a little ramp, I might sell a 420 for Wednesday.
Yeah.
And that's tight and a little bit aggressive. But given, like, I'd say looking back over these past 6 8 weeks, that's warranted. You know, if we were in the December timeframe, I might sell a 430 on a Tuesday and then roll down on that Wednesday as the day settled out and just kind of keep rolling. I mean, that's a lot of attention to the market, and people might not be interested in that, but like the pattern's pretty consistent, barring a breakout. Like Tesla's a story stock, and like we just haven't seen there are two cities. There's a limited number of robo taxis. Now we're talking about space AI. Like there'll be a breakout, but it's going to range trade for a while until there's some regulatory or robo taxi unlock. That's my personal view on it. So like that interim volatility is kind of free money to be made.
Yeah, no, I completely agree with that. It's been range bound from, I don't know, maybe it was range bound from maybe like October to December, and just selling puts at under 400 and calls over, covered calls over 440 or something like that, 450.
Yep,
I was
yep.
just,
It's printing.
yeah, yeah, exactly.
Yeah.
One more question for you before I turn it back over to Keith here. You mentioned that you're all cash right now. Were you concerned about taking capital gains? I think a lot of people would consider doing what you're doing, which is, hey, sell your shares now. There's a lot of concern in the marketplace, and then sell cash secured puts at 350. And if you get assigned, you get assigned. If not, you're making great money on those cash secured puts. But I think a lot of people would say, well, I don't want to take a big capital gains tax bill. I've got one this year from doing a little bit of wheeling last year that I am now going to have to pay the tax man a lot of money. But
Yeah, great.
first world problems, I
It
guess.
was a very difficult decision. I had misgivings over how to play this all week. Like my spidey senses were off all week on just being concerned about the escalation ladder. And so yeah, I took about a $300,000 capital gains tax, or
Profit.
not my tax bill profit. Yeah.
Yeah.
Um, but I've just seen this shit go sideways so many times. Like Bobby, I took an early retirement. I'm 40. Had a good job prior, and was able to, like last year while I was working, match my salary on selling covered calls and saying, "Hey, this is a very I can do this strategy and maintain income, but you have to protect nest egg
Yes.
when you make a decision like that."
Yep.
And watching it ride down to 330, or like I'm honestly, like, from Tesla standpoint, I was somewhat scarred by the Twitter scenario.
Yeah, we all were.
And
Yeah.
yeah, and I don't have the risk tolerance to see that happen again.
Yeah.
And
That's why I have covered calls on covering all my shares right now. It's not
so
gonna.
that was it. It was just like, I've got fucking two kids, one on the way, and I just it's not worth the overnight. You know what it is, man? When you can't sleep at night, or when you're waking up at 4 to check the pre-market, at some point you got to gut check that.
That
And so
actually.
the capital gains was worth it to take the chips off the table and be like, look, I'm down half a million from the high water mark, and just being like, more than that, but just being like, I'm okay with what I got. If I'm wrong, I'll own that and I'll get back in. But I can sell cash secured puts to generate some income in the meantime, but the tail risk of this isn't worth it.
Yeah. And what did you do before you retired early?
I was an RIA. I'm CFA. all that stuff.
Interesting. You
Yeah.
mentioned something that I think is really interesting, which is if you have to gut check yourself, if you're uncomfortable and you're waking up at 4 in the morning, there's something wrong. As I think about this all the time. With option selling, we are selling based on probabilities, on volatility crush, and on time decay primarily. And
Yep.
so we're always placing trades when we have an 85% probability of profit or something like that. So if you are waking up at 4 in the morning concerned about something on your portfolio, to me, that means you shouldn't be in that trade. You should have managed it yesterday. And now waking up in that morning, it's probably time to manage that trade now. And I say the same thing when it comes to zero DTEs. And that's why I don't trade when the zero
Yeah.
DTEs, when the VIX is at 26, 27. I trade them when they're at 15. I don't want that volatility. I don't want to be down 400, 500%. You will with zero DTEs occasionally, but I certainly don't want to be down 1,000%, right? With zero DTEs, the method that I teach, we sell it at about a 3 delta, and so you have a very high probability of profit. But you don't want to find yourself in those situations when you're down. So you're anyway, zero to D's, you're gonna win 29 in a row, and then that 30th one is the one you have to be concerned about. So if
Yeah.
you're down 400% on that, you're
Yep.
doing just fine. However, generally speaking, as option sellers, we should never be in a position when we're like, 50-50 shot, 50-50, 50% chance I'm in big trouble, 50% chance I'm okay. And if you're waking up in the middle of the night wondering which side of that 50-50 you're on, you should not be in that trade. You should be out of that
I,
trade because we trade on probabilities, not on gambling.
couldn't agree more. 100%.
Yeah. Yeah.
That's the best. That's the best advice for especially people starting into this stuff.
Yeah, and getting started in selling options, which is Keith here. I want to ask you a few questions here because Keith got started just recently, and he's absolutely crushing it. So I think it's a really good opportunity for newer traders to hear Keith's perspective and kind of what he thinks has made him successful so far. But learning options is so challenging because of the vocabulary. I remember the first time I listened to a Tasty Trade video. It's like when reading a book that's written in Old English or something. Like he's like, okay, I understand like one out of every three words here. What are they saying? So just learning options is so challenging. So Keith, if you want to come off mic here, I want to ask you more about your like how what it was like learning options for you.
Yeah, it was kind of challenging because of vocabulary at first. But what helped me a lot actually is AI. I used, either ChatGPT or Claude for like all the terms and some of the strategies that I wasn't really catching on really quickly. I would ask the AI, and it would tell me. And I even ask it like some of the trades that I want to do. Not that I just blindly follow whatever it says, but it gives me almost like a person to talk to and to kind of like think things through. That actually helped me a lot.
Yeah, I find AI to be an incredible learning tool and definitely valuable for options trades. It will get number manipulation wrong sometimes, but we're not really using it for number manipulation necessarily. Like if I sold it at this percent, like what would happen, whatever. It's more learning the concepts. It's phenomenal for discussing options concepts. So yeah, I think I wish when I had, you know, rewinding back 15 years when I was in school, I wish ChatGPT and Grok were around. Um, what Keith, what advice would you give to somebody, would you have for somebody that's just learning options? It's kind of, a few months behind where you're at right now.
I would say definitely take a course, and not only that, like even after like the course, I consumed so much content. Like I watched every video I could. When I have my spare time, like I'm going to gym, I'm doing like walks. Like I'll put on a podcast and I'll just listen to you know whatever Tasty Trade has, or even like news updates. I just consumed a lot of content. I think that's helped me quite a bit.
I think that's probably absolutely right. When I was learning to sell options, I I read Julia Spaniel, is that her last name? Her book on options, which is phenomenal. She's one of the Tasty Trade um, co-hosts, not co-hosts, but one of their entertainers. I'm not sure what they call them. Her book is absolutely phenomenal. And then Tasty Trade and a lot of other people have really good videos on selling options that yeah, I agree. When you are learning, you should watch every single video on options you can. I mean, there's a ton of good information on there. The hard part is stitching it all together in a mesh, like there's videos on all these concepts individually, but learning how like volatility affects, option prices and when you should sell with volatility and option prices, and then how you should manage that as it's getting close to earnings. And then, like wrapping all these concepts together is the part that I feel is kind of missing from options trading, and where a course or a mentor or something like that can really help you. Keith, have you met anybody else that's selling options that you have been able to talk with about these concepts? For me, when I was learning with two other guys, and we would have dinner every month talking about what we did wrong, what we did right, what our profit loss was. And we're all very aligned on how we would kind of track our profit and loss for options trades. Specifically, we wouldn't do it on the whole portfolio. We wouldn't say, my portfolio is up or down this much. We would say, I made this much on options, or I lost this much on options. And we would bring to the table a concept like capital efficiency. And we would talk, at that dinner about capital efficiency and how each person's portfolio looked and whether it was capital efficient or not, for example. So have you found anybody? Have you reached out to your peers that you think might be trading options or selling options, and seeing if you can kind of find a community to build around you?
Yeah, actually, when I first learned about selling options, I reached out to everyone I knew that was like playing with stocks, and I asked them, "Hey, do you know about this concept and whatnot?" And it's a lonely place. I haven't found anyone that I can talk to on the daily, besides you, about selling options.
That is just the I mean, I have the exact same experience other than my two friends, um, that we all kind of learned as a pod together. But other than that, I don't know anybody else in my daily life that sells options. And I feel like that is everybody's perspective that, on here, whether it's Bobby or JRD or, Teal, James, I'm sure all you guys probably have the same experience. And I think that's really exciting because what I think that means is that we are early to this space, right? And that means we can take advantage of really juicy premiums, and the market hasn't figured out that there's that sellers have such a huge advantage. I feel like anytime you're on the kind of the early side of a wave, you you will benefit tremendously. And because of the technology with Tasty Trade, we can see what our probability of profit is on that trade before we place it. We can see what our probability of a 50% is before we place it. We can see what our theta is, our theta decay. All those we can see, the IVR. Just there's so much information. We have so much information available to us that wasn't available to options traders just a few years ago. And then the other thing that's changed massively that JRD could attest to is that we basically are at a like a zero friction options trading now, where it doesn't cost $10 to sell an option. It costs $1 plus 35 cent plus a 30 cent, 5 cent fee or something like that. But it's like $1 a contract. So it's only recently that the cost of selling options, or buying options for that matter, is low enough that we can do it at such a high frequency. I think I placed like 2,000 trades last year. So, if that was 10,000, if that was $10 a contract, that would be, um, $20,000 in fees right there. So yeah, I think we're really early to the option selling space, and I think there's probably a lot of ways that we can take advantage of that as a community and as individuals. So I'm glad that you're learning this, Keith.
Yeah. When I also on the learning side, when I first started, I did really few contracts, like literally one contract for, a couple months until I kind of got the hang of it. And that's another thing I feel like, you can paper trade and you can do all that, but you really got to, get into it and see how the underlying moves and see how you feel about it to kind of like really get a hang of it. I would really recommend people keep small, really small in the beginning, and then about the selling options, it's almost like it's a cheat code. Like, I don't know, it's really, you get so much advantage on your side, with the theta decay and the VIX compressing and stuff like that. It's almost like a cheat code. I feel like it is. I don't know. I'm still so new, but it feels too easy.
The reason why it feels too easy is when you started to ramp up was right around, I think, when the VIX was at is 29. And so your ramp up period, or since you've ramped up, has been in that March 6th, the March, till now, I guess. But um, if you had started, and I've seen this with other people that I've taught, if you start at a time when volatility is rising, like if we had taken, my course was on December 31st instead, or December 30th instead of January 31st, you may have had a different experience than you have now. Ramping up with such a high volatility that it has now so far been
Yeah.
contracting, it has been great for all option sellers, including you. JRD is definitely right. If we do start to see volatility ramp back up, which we are in the last few days, but if it does go back up, even above a 30, um, we're that's when the real skill comes in, when you have to start managing, when every trade seems to be going against you. When you place a trade with an 85% probability of profit, and you're like, hey, 3 or 4 trades aren't working out in a row, that doesn't make any sense because I had an 85% probability of profit. Well, the reason why they're not working out, those 3 and 4 in a row, is because volatility is expanding. So as that volatility expands, you have your standard distribution expand as well. So the probability of profit that you thought you had when you placed it, or that you did have when you placed it, is now not as good as it was when you placed it, because volatility has expanded and option prices have risen as a result, which is bad for you as an option seller. So definitely keep an eye out on that VIX, because if it continues to rise this week, we're going to have to do some managing, and that's when the skill starts to come in.
Yeah, actually, I was gonna ask you a question regarding the VIX. Since it is rising right now, would it be a good idea to roll some of your expirations that are getting close to expiring to further out strikes?
Yeah, that is a really good idea. And in fact, I did a lot of that on a Friday, maybe Thursday, Friday. With the VIX rising, especially right now, a lot of us, if you are a trader that trades with the method that I use, where you sell at 45 days or so to expiration, that can be anywhere between 30 and 60 days, and I like to sell at the monthly expirations, because that's where the bid ask is the tightest. And so if you are in that, what would be April? I don't know,
17th.
17th expiration, you are probably like 25, 26 days till expiration. So now is a
Yeah.
phenomenal time really to roll out to the next monthly expiration, which is probably 50 something days out right now. And so you'll be able to get wider and you'll be able to get safer. Of course, you're going to take a loss on those trades as you roll them out, at least one side of it. If you have a strangle on, one side's probably profitable, one side's probably in the red right now. But rolling them out is a phenomenal idea, even if you have to take a small loss to do so. As long as, of course, when you roll out, you always want to roll out for credit. If you can't get a credit on the rollout, it's probably time just to close that trade.
And are we resetting back to, I mean, we're going to roll out to the May 15th. It's like 54 days right now. Are we resetting back to the 16 delta around?
That's what so the answer to that from my perspective is you want to roll out as wide as you can get while still receiving a credit. Especially right now with what JRD was talking about, that we may have this tail risk of further escalation that's going to cause volatility to continue to rise. I would probably roll out as wide as I can get while still collecting a credit, whether that's a 16 delta or a 13 delta. You just have to see what's available to you. But
Yeah.
I wouldn't go closer for the goal of collecting more premium. If you can roll out to a 16 delta and collect 20 cents in premium or something like that, or you can roll out to a 20 delta and be a little bit more aggressive and get like $1.50 in premium. I would choose to roll out to that safer delta, that 16 delta, because right now, although we do want to be making money and we are making money right now, we also want to have an even more focused eye towards risk management with the potential escalation in this war.
Yeah. What do you think what would happen if Trump did put boots on the ground? That scenario. It looks like more and more that's gonna happen.
Well, volatility will rise. Volatility will rise. We didn't the S&P 500 was flat through like mid maybe the end of February, and now we've started to see it start to pull back. So I think we're down 4% or so for the year. So maybe the market is kind of late to reacting to this Iran war. Maybe it's going a little longer and it's more of a fight than the market expected. And so yeah, I would expect a pullback. But we've also seen that a few months out from any war that started, once we have some certainty in the direction of that war, we tend to see the market come back. So I don't know anything, of course, but my opinion is that volatility is probably going to continue to rise this week because of the standoff between Trump and Iran right now with the Strait of Hormuz. And if we're sending troops, into Iran, that's certainly not a good sign. And I think we're going to experience a lot of volatility and a market pullback until the market has clarity on what's going on with the war. Hopefully, but I really think Trump is not a president that wants war. I think he wants a strong stock market. He knows we're going into midterms. He's a strategist, if nothing else. And so I don't think he wants this to continue to escalate. I think he wants to end it, and maybe he takes drastic measures to end it, like bombing all of their energy reserves and their ability to produce electricity. I don't know, but I do think he does not want this to be a prolonged war.
Can I put a couple bogeys out there,
Of
Greg?
course.
Yeah. So you think back during COVID, nobody remembers the market drop during COVID because the stimulus measures that went into effect where things got way out of control.
Mm-hmm.
But there was a significant drop in equities across the board when you had Bill Ackman coming on CNBC, and saying things are going to zero. technically we're not in a bear market to we're 20% off our highs. We're 6, 7% now. That's your head check. That's how much meat on the bone before you can should expect significant policy intervention. So you'll get tweets that are encouraging. You'll get interviews from Besant or Fed chairs that are hopeful. But from a gut check perspective, you should have another 14% expectation for a drawdown before markets really do take control, in my opinion.
Yeah, no, that's probably wise. We are down. I'm looking at it right now. The SP 500 is down 5% for the year, and it really only started. We were flat until February 25th. So really, just in the last month, less than that, the market has been down.
You're also hearing his commentaries with like, I thought we'd be down more, or I thought oil would be higher. Like it's given some runway for further drawdown. In my read on it,
Yeah,
further drawdown.
yeah. I mean, I think we're gonna we'll wait and see. I think this week is probably going to be pretty telling with the standoff between Trump and Iran's leadership, and um, and then I think a
Yeah,
lot of us here are Tesla investors, and there's a lot is projected to happen in April, and we have the teraflop factory, whatever they're calling it, terafab factory. Um,
teraflop. Yeah.
yeah, yeah. So, I mean, there's just going to be a lot of volatility probably in the market as a whole and in Tesla. So I think we're
I think as a base case, it's 2 to 3 weeks of figuring out which direction this is heading,
yeah. And what would be your
and hopefully this week, but base case 2 to 3.
yeah? And so if you were in your shares right now in JRD, what would be your advice to people?
I would sell like one of Goldman's strategies that they would do would be like selling the covered calls and buying protective puts, but then sell like a put spread on the downside.
Mm.
Buying a 350 and selling a 320 2 weeks out, something like that, or maybe a little more aggressive, and just managing the downside.
So
Because I don't think the upside is. I mean, who knows? Like you be conservative on the upside, but you want to cover your costs for the downside. Um, but I'd be more aggressive on the downside on it, like a little tighter on the downside. So what are we trading as close like 367? I'd look to buy maybe 3 weeks out, 350s and sell 310s or 300s. Um, a bear call spread,
mhm.
and then on the upside, selling 3 weeks out for 20s would be a good, just got like not looking at the deltas on it, but a conservative case. I don't know. First blush.
Yeah, yeah. I don't know. It's pretty interesting. I think I'm certainly gonna keep my covered calls on for now.
Yes, I would absolutely do that. I don't. There's no breakout coming on Tesla until we need. There's two cities. I mean, the robotaxi versus the rhetoric has been a disappointment.
Yeah.
I mean, it just has. Like, there's two cities. Austin's been flat, and the Bay Area, you've still got supervisors. Hopefully, it's a regulatory block, and there's some big, production ramp rollout in late April, and we do big across Texas, and that will be great for the stock.
Yeah. Do you
It's a show me versus tell me stage, and I don't think the Terrafab did him any favor yesterday.
Yeah, I actually posted about this on X. Everybody is excited about a potential merger between SpaceX and Tesla right now. But I'm like, guys, let's be a little cautious here. Like the thing that is holding the Tesla stock back is that fundamentals, the financials of Tesla have not yet been realized from their technology. And that's what's keeping them back.
Absolutely.
And so
Absolutely. It's a profit. Put points on the board.
yeah, and so
Absolutely.
if you're gonna merge with a space company, a rocket company that is private, and it's worth, about the same amount, 1.5 trillion or whatever it is, 2 trillion. Do you think that's going to improve the financials across the board? No, I don't think it is. I think it's going to make them even worse. So it's again, it's going to be like
Well, I
amplifying
counter it
them.
only in the fact that like the potential growth is more,
Sure, yeah, but
right?
what's holding the stock
But
back right now is that the financials
it's
aren't keeping
earnings.
up.
It's earnings. Absolutely.
Yeah.
You're 100% right. It's earnings. Put the fucking freaking points on the board.
Yes.
Like we should, the EPS should be higher. We shouldn't be stretched this far. We're still in speculative territory for the EV dominant winner, the FSD dominant winner. Like put the points on the board and let's get the earnings, because now you're just like you're kind of selling hope. And you tell me this plan that Elon puts out that I hope we achieve this before, or I want to see this before I die. It's like what?
Yeah.
I don't know if you listened to his address last night. He's like, I want to see the smash launcher to space before I die. It's like, sorry, what? That's what we're selling is a 40-year time frame?
Right.
So like, retail is huge on Tesla, right? Like he's such an inspirational figure, has been on the right side of history for so many times. But to get institutional buy-in and big money buy-in, you've got to put points on the board. It can't be a hope story, but for so long.
Yeah. Yeah. That's right.
But I do think it's there. It's just like when. It's there. The technology's there. Like you have the car, right? Like you'd use
Mhm.
FSD. The technology's there. It's just, give a little something to shareholders. Launch 5 more cities.
Yeah, I do wonder why I have been keeping track of the robotaxi tracker. And I noticed somebody pointed out to me that, where they had like 8 autonomous cars with a safety driver in it in San Francisco, I think maybe, or I guess it was Austin. Now they're
Austin,
down to
yeah.
just 1 car. So they took 7 of the 8 off the road and they hadn't been seen for a month or 2. So I do wonder about that, but it could be a variety of things. Did you hear about that as well?
Yeah, I'm tracking it every day. So in all, fleet is 503, which is good growth. Austin has stayed basically flat. Unsupervised in Austin is 8, but apparently it's within a very small geofence space. So that's the base. That's the data we're getting. The bull case is that there's this regulatory overhaul coming i- towards Tesla and the April production ramp for cybercabs, and they could bum rush Texas like tomorrow if that's true.
Mhm.
But I think the market is saying like we bought the comp package at 440. The Delaware case was dismissed at 430. Version whatever we're at now, 13.3. Um, it's a show me story right now, and nobody's showing us anything. And I don't want to hear about moon launchers,
Right. No, I hear
right?
you on that. It's
Yeah.
interesting. When I heard that they had taken 7 of the 8 robotaxis, unsupervised robotaxis off the road in Austin, it does look like now they have back 1, let's see, 1, 2, 3, 4, 5.
Robert taxi trackers showing 8, but I don't, it's kind of third party information.
Sure. Yeah. Yeah. Interesting.
I mean, you have to like the rhetoric from Elon, right? Like we're going to be in this many cities by this date. We're going to be this much exposed to 25% of the United States population by the end of the year. There's a disconnect, and if that's fine, but tell us why. Like, sure, after all the stuff we've been through from Gate to Twitter purchase, comp approval, like there should be more clarity on that. And I don't want to hear about moon launchers and to buy the buy the hope for another 5 years. But I'm still, I mean, I my reasons for getting all cash on Friday were just getting like, dude, I feel like there's a tail risk that's just not worth it because I'm semi-retired. I've got, a family. I'm not. It's not worth it for me to ride this to 320 or 300 right now. And if it goes, close at 367. If it goes to 375 on Monday, I'm really happy, and I'm probably gonna just monitor it for the week and probably the next 2 weeks, honestly, because that'll give a good trend on the conflict. I hope I'm wrong, um, but I just feel like we just need to wait and see.
To be fair, the mass drivers on the moon and like in that whole Terrafab presentation was more guarded around recruiting. So yeah, it's like 40 years down the line, but it's more like recruitment wise. But I have a question for you too, because I'm heavy Tesla and it's like kind of directly tied to my buying power. So I'm kind of like nervous to go in too deep here at this point for a lot of the reasons that JRD kind of outlined earlier. Like there is an immediate threat potentially the next couple of days with all this stuff happening. So I want to know what kind of like percent of buying power you guys are kind of employing right now, when there's a lot of potential downside risk in the short term for Tesla. Like, what are your plans around your percentages and how you're employing that?
Yeah, that's a really good question. And the rule that I tend to live by is the lower volatility is, the less buying power you should have on. And the reason for that is because as volatility grows, as it expands, you're going to want to put on more buying power once it's expanded. So we're kind of at that expansion area, right? We have a VIX of 27. The highest has been, as of recent, is 29 point something. So you should have a lot of buying power on right now. And I'm gonna asterisk that with, you really probably shouldn't have any more than 50 to 60% of your buying power on at any time. Right now, I have, I think, 65% of my buying power used, which is a little higher than I wish I had on right now. Because when if we do experience the tail risk that JRD is warning of, then what you're going to see is not only are your equities going to lose value, which is going to reduce your buying power, but if you have portfolio margin, there's two different types of margin. There's Reg T and there's portfolio margin. Portfolio margin is more of a Reg T is more of a static margin requirement, and portfolio margin is more of a real time calculated portfolio margin, depending on what the brokerage sees as the risk to your portfolio. So if you have portfolio margin, as your positions, as your stock loses value, if we have a pullback and your option positions get tested on the put side, those option positions are going to require more buying power than they required when you initially put them on. So if we experience something like we did in March and April of last year, where the VIX went to 55, we had a intraday 7-8% pullback in the S&P 500, you're going to see that buying power evaporate really quickly. So I would highly recommend not having any more than somewhere in the range of 50 to 65% of your buying power on at any time. I would suggest having maybe 50% on right now.
Yeah, so mine is portfolio margin, like you said. So that's what I'm worried about is like, say Tesla falls for whatever reason, if the war stuff happens and it's the high beta, right? So my purchasing power would be dramatically decreased. And if I'm all in a bunch of these option plays and then those kind of crash, and I don't want to be stuck in a position where, I'm having to make some bad moves. So I'm probably even less than 30% right now.
Oh, less than
Um,
30%?
yeah, like I just increased it quite a bit because I was able to link my main account. So, um, I
The,
have a lot
the,
more, but I'm kind of nervous to employ it right now, especially with potential downside risk in Tesla and then it being tied portfolio wise. But
that's honestly where zero DTEs or 1 day DTEs come into your favor, because you can buy protective puts, and that will increase your buying power or margin amount
yeah, I
Yeah.
was looking at doing credits too,
drastically.
but like, yeah, I don't know. I did some weekly credit things and it didn't work out very well. So I kind of got burned. I got in a little panic in, and then kind of closed a couple for a small loss, but then it rebounded literally like hours later. So yeah, I kind of
Dude,
love doing that.
I sometimes find myself in that panic mode, and that's such a good signal to just take a beat. Like, just take a beat.
Yep. Good
You
advice.
know, you don't have to trade just to trade. But we've all been there when it's like the market's going left, right, sideways,
Well, yeah, when I came up
and you
earlier,
and
I
you.
was going to talk about, because I took Greg in Nick's course in January or whatever like that, and I put on some trades literally right before the war. So I had these Nvidia puts on, and we talked about it I think a couple weeks ago, and I think it was red the whole time until I think it was within that 21-day window. I was just waiting, and then finally, good positive day hit, and then it boosted up. I got out just below 50% on 3 of them. So it ended up working
Dude,
out, but it was like red the whole time.
yeah, the long term VIX is 15. Like, that's gospel. It's gonna mean revert. You just, in the next 2 weeks, could it spike to 35 or 40? Yeah. Like, just a situational. This is I don't to personally, this is my personal view. Like, and that's why I made the decision I did on Friday. It's like, you just got a situational awareness. Like, things fucking chips are on the table.
Well,
Stuff is hitting the
Iran gave
fan. Like,
direct targets of what they're going to hit, right? Desalinization plants, energy infrastructure, other oil things. So if that actually does happen, I could see shit hitting the fan, right? So that's kind of.
they're honestly, I don't say winning at this point, but they have more cards than the other side though does. They do. They do. They have nothing to lose. It's a holy war for them. They have nothing to lose. They
Oh,
have.
they're in total destruction mode for sure. So they're going to do
Yeah, they
whatever
have.
they
Yeah,
can to like
yeah,
screw up the markets,
You
oil,
don't.
whatever. Yeah. So.
Yeah, you need to be careful. And so protective puts are a good idea, and to sell covered calls to offset some of
Well,
that
what I've been doing is
cost.
like what Keith said too, is I've been using AI. So I have a list that I've kind of inputted into Grok or whatever. Then I'm like based on certain requirements, right? Like RSI, forward PE, PEG
Yep,
ratios,
yep.
tons of stuff, right? So even if I put in these puts, say on MU or NVIDIA, like if I'm assigned at, a decent price, I can wheel out of it. And like, I don't have any leverage. I'm low on buying power. So I'm kind of comfortable in that zone. So
I
I'm not
love
going to be
that. I
putting on
love
any
that.
puts on a company that I'm not 100% confident in owning for months if necessary. It's kind of like my
Yep, I
mindset. So
love
I can
that.
sleep easy.
But as a way, just go back to your original question, as a way to decrease your leverage amount or margin amount, buying low cost, short dated puts, it credits you right back. And at least my experience on from E Trade Morgan Stanley. If you get into the danger zone.
I've been looking into other options too, like dailies or other stuff, but I've just kind of following what, the course from Greg and um, Nick, trying to follow through with that because the weekly stuff kind of burned me. So, but I'm always open to
Yeah,
other
weekly's
ideas.
tough, man.
Low
Weekly's
risk, like
tough.
lower risk, even lower deltas. But even Greg was saying a couple of weeks ago, okay, what happens of loss climbs super high, right? Because if you're at that low delta, you really get screwed if it kind of tests that side. So learning, I haven't been doing this long, but learning a lot along the way
It's a
here. So
worthwhile exercise, though. It is like good, consistent. To Greg's point, like, I don't want to say free money, but there are like inefficiencies in the system that are there for the taking. To play the house, that's the goal. Like, you want to be the house.
but I'm curious what Keith and like you're new to this, like you said you're up $23,000 this month. Like what have you been doing? What's your criteria? What are some of the things you're looking at? And like you're obviously increasing probably the number of contracts that you're doing now, right? So do you want to be a little more specific in kind of what you've been doing, or
I've been,
share some?
yeah, I've been doing exactly what the course has taught me. I've put on strangles, a lot of strangles recently. My buy power is actually pretty high right now. It's like above 90%. But that's only because I put on several puts of companies that I don't mind owning, and I'm cash heavy. So I want to own more stock. So yeah, I'm kind of the opposite of you guys right now. My buying power is pretty high, but I followed to the T, I think, of what the course has taught me, doing like 45 days. I don't do anything shorter than that. I do either 45 or 60 days. I've tried to go with I think it's month end, because of the bid ask being tighter. And I found that I've exited the trades or rolled the trades way sooner than 21 DTE. So that's, I've been taking profits like every day. I built a tracker with AI that shows me my P&L per day, and so I see every day, how much, my P&L is. But yeah, I basically followed the course to a T.
Nice. Yeah, I've been doing 46 pretty much no longer than that. But like, I mean, like sometimes I'm looking at the VIX all the time. So like, I'm kind of seeing, okay, is VIX peaking? And then what stocks are on my watch list that are kind of like at lows? And do they look like they're going to bounce? Like, is that something you look at, or is it just like
The VIX,
strict rules?
the VIX, I've kind of looked at the trend. When I start to see a downtrend, I go a little bit heavier, and like right now it's on the uptrend again, right? So maybe go a little lighter. But as soon as you see like a downtrend, I tend to go a little heavier on the contracts. As far as
Yeah,
like
because you're able to close at like 20, 30% within a day, or even sometimes
exactly,
minutes, probably, right?
sometimes I see it in a day, and I'll close like 5 or 6 contracts. It's actually really quick. Like 1 to 3 days has been kind of how it looked like for me.
Nice. I'm usually not that lucky. I've usually been holding for quite a bit longer. So seems like you got your system worked out to get it in and out in 3 or so days.
James,
Yeah. What?
one thing that might affect the difference you guys are experiencing is, and I, in my experience, I probably roll or close, 3 to 8 days, probably closer to the 3 to 5 day mark. But it depends if how you're rolling, right? If you are rolling at about 25% profit, you're going to roll earlier, right? If you're rolling at a 50% profit, it might take you a few more days to get there before you're rolling or managing that trade. So that might be the difference for you guys there. But one thing I would suggest in terms of rolling is, instead of rolling based on, am I at a 50% profit or am I at a 25% profit, roll based on your deltas, and the profit will come as a byproduct to that. And what I mean by that is, if you like to put on, say, a 16 delta put, roll once that put is down to like a 10 delta or a 12 delta, and roll it back up to a 16 delta. So you're not looking at how much profit do I have, because that can be impacted by, that could be impacted by volatility, right? Like volatility, if you sell a strangle at a 16 delta on each side, and then over the next 2 or 3 days volatility starts contracting, you will have that 25 to 30 to 50% profit, but you still might be at a 16 delta. Now you'll probably be a little bit smaller delta, because volatility contracting means that the expected move is going to contract as well. But you might not want to roll. You might have placed that trade at a 16 delta. Now you're at a 15 delta, and you're like, oh, I'm at a 40% profit, let me roll up. But then you're rolling up to a 20 delta or something like that. So instead of rolling based on profit, as I've kind of matured as a trader, I've started rolling based on, where is my delta, and do I want to move my delta back up to that 16-20 delta where I like it.
Nice, good to know. Yeah, I remember we went over like rolling the Nvidia one that I had, and I think I would have had to pay money for it, even like because of the backwardation or whatever, like
Oh,
that. But yeah, good to know the roll based on the delta rather than the profit. That's a good little tip.
yeah. Yeah, backwardation is an interesting thing that we've started to see lately that we don't see very often. So we've been going about an hour and a half. It's 9:30 here. I think I'm ready to hop off here. But does anybody have any kind of closing thoughts or topics that they want to hit on before I close this down? All right. Well, thank you, JRD, for your surprise input here. Loved meeting you. Your thoughts were really appreciated. Keith, I really appreciate you co-hosting this with me. Every time I do one of these spaces, these videos or these audios get a lot of listens, and I think people get a lot of enjoyment and value out of them. Bobby is always contributing a lot. I really appreciate you doing that, Bobby. And Ronnie, Teal, Reno, I see you guys on here all the time. So thank you for listening and participating. Like always, I'll try and hold these spaces as often as possible. And JRD, we'd love to see you back to talk more. Maybe next weekend we'll hold another one if the whole world goes to shit this week with volatility and Iran war and Tesla announcements. I'm sure it's going to be quite an interesting week. So everybody get some sleep and prepare for the crazy week ahead.
Thanks, Greg, and thanks everyone.
Yeah, thanks everybody.
Thanks, Greg. Good hosting, man. Appreciate it.
Thanks. Bye. Have a good night, everybody.